Welcome to Silicon Valley Impact, where business insight meets startup innovation. And now, give a big warm welcome to your host, Brian Sparks!
Yes, yeah. Lean into it a little bit, Brian, if I do say so myself.
I feel like I really crescendoed on that one.
You did.
Oh my
you
gosh.
did. Way to lead into it.
Yeah, I really wanted to bring a big build.
All right, and they're still rolling in the crowd. Welcome to Silicon Valley Impact. Welcome, welcome. My name is Brian Sparks. I am your host. Lisa Helfrich is not with us today. She is on vacation, but I have two phenomenal guests with us today. We have Megan is returning today. She was in episode 1. So Megan, good to have you back.
Thank you. Good to be back.
Yeah. And we yeah, they remember you. They really remember you. And we have Keshia joining us. Keshia, good to see you.
Good to see you too. And thank you so much for having me.
Yeah, this is going to be fun. So we have a little bit different format with Silicon Valley Impact today. We're just going to have an open mic. And so we have, again, Megan returning, but I want you all to meet Keshia. Keshia, tell our fans and our audience a little bit about yourself.
Absolutely. So Keshia Theobald-van Gent, the only one of those on LinkedIn.
Love it.
It's a joke, but it's also true. So I today am a VP at BDev Ventures, and we invest in B2B SaaS companies, B2B software, anywhere from late seed all the way through to Series B. We're pretty new, so we've been around about 3 years, and we have 36 investments to date. So we've been deploying capital. And our big value add, which I'll mention here, and hopefully we can talk about more, we, in addition to providing capital, give all of our portfolio companies access to a proprietary lead gen platform. So we're actually all operators ourselves. I've been a founder. Our managing partners co-founded Buyer'sDev, which is one of the largest LATAM tech unicorns ever. And so, we like to be more practical in what we're giving our companies.
I love how you leaned into that because I'm going to tell our audience how we met and why that extra tool helps. And I think that's what's going to set aside the deal flow, or elevate, I guess the right word is, elevate certain VCs in Silicon Valley and the world are the tools that they bring to the table. It's not just, whether or not you have access to money, but really what you and Megan at Ignite, you guys are doing, Megan, is that you provide more. You go above and beyond. And so, Megan, really quick before we get into this conversation, just for those few who didn't hear you first in our first episode, give a little intro about yourself.
All right. Hello, everybody. So a little bit about myself. I won't go too far back to my Midwestern days, but since I've been here in the Valley, started a health tech company, finished my MBA, and finally found my way home to Ignite. I joined last year, helped them with fractional COO services on the advisory side, and currently sit right now as the general partner for our Ignite Fund of Funds. So happy to answer all the questions that come with what is a fund of funds and why. But Brian and I got to meet last year and sort of been collaborating in the event space. And
well, don't downplay it now. We're best friends. I mean, let's just keep it real, right?
I thought you and I were best friends, Brian. I don't know. All of us, I'm shocked.
There's a BFF triangle going on right now. All right. So your GP, your fund just kicked off recently. Yep. Yeah. So congratulations on that.
Thank you.
What has that new responsibility been like?
It's awesome. We love it so much. So we had a micro fund that we launched earlier this year. It's a $2 million micro fund, and it was around the thesis that people want access to Silicon Valley VCs. I'm sure you know. So we were able to raise that money fairly quickly, worked over the following quarter to get a $20 million fund ready to go. And we officially launched our fundraising efforts at the end of May. It's been incredible through portfolio construction, building out the diligence models, meeting with LPs and being able to educate them on the ways that they can get access to a lot of the things that they typically don't have access to in traditional investment portfolios. And always, just getting to meet all the different VCs out there and sort of understanding their unique perspective in the market. It's the best thing that I've ever been involved in.
You're living the dream.
I'm living the dream.
I love it. I love that for you.
Me too.
And we're going to talk a little bit more as the show goes on about how to get into venture capital. I think that's really one of many of your wheelhouses. So I'm excited about that. Keshia, you and I met a few weeks ago. We quickly became best friends.
Oh, wow.
It's a four-way tie now, right? Yeah.
It's a three-way tie, and I think I'm in third position at this point.
So I'm not going to name names, but you were on stage with two other very recognizable individuals, or three very recognizable individuals, and very brilliant. But you kept bringing back the conversation to the importance of access, like Megan's talking about, but more importantly, relationships and character in the companies that you invest in. So I had to meet you. I weaved through the crowd, fought the battle, fought the good fight, and eventually got to you. And you and I just geeked out on that. Tell us a little bit. So let's just get into it, because this is, again, where you and I really connect. And Megan and her team at Ignite, really, we all geeked out. When you were here before, Megan, we talked a lot about building community, and Keshia is big on this. So let's begin there. When you got into this, like, why, the simple question, why are relationships so important in this space?
Yeah. That's such a good question. I think you can answer it from a lot of different angles. Because I think, on the fund side of things, our relationships, even though we consider ourselves a very data-driven fund, it's all still very relationship-based. About half of our deal flow comes from introductions. But on the founder side, I think it's about, it's a combination of things, right? We're, especially at those early stage investments, we're investing in people. Yeah, a lot of companies can have the same idea, right? And yes, you can have products that truly have an amazing moat, but without the right people driving that, without the connection to the customer, and I think this is the conversation that you and I completely geeked out on.
Yeah.
And it's something all of our portfolio companies are sick of me telling them about, which is, do you know your customer? Because at the end of the day, if you're not solving, and these are the companies we invest in, if you're not solving a real problem for your customer, if you're not making their lives easier, if that's not a part of your value prop, you're probably not going to go very far.
Well, what I really like about the way you put it on stage, because let me again set context. Megan, I mean, it really shined on stage when Keshia was talking.
Flattery will get you everywhere.
Yeah.
So thank you.
No, but it really did. And that's why I wanted to have you on the show, is because, again, the context and the content in which the other, again, brilliant presenters were talking about was the smartness, if that's a word, of their idea. But you kept coming back to the founder fit. Are they coachable? Are they able to connect? And it's one thing to say, do you know your audience? And for one person, they'll say, oh, there's an opportunity, versus, oh no, there's an empathetic understanding of my target market.
Yeah, I think founder market fit, encompasses all of that for us, but it goes so far beyond. I mean, you talk to a lot of startups and you talk to a lot of funds, but how many of us have talked to a startup and you're like, how many, customers have you chatted with about this? Like, you're in customer conversations, maybe you're building your product. How many people have you talked to? And the majority of the time, the answer is less than 10, right? It's less than, it's like, oh, well, we did 2 POCs and this one went well and this one didn't. And now we're launching, we're raising our seed round. And it's like, oh man, I please go talk to 10 more people. Yeah. Please go develop that understanding so that you can build a product that your customer loves, rather than what we see a lot of founders do. And it's such a, it's too bad, because they build great products and it's like, oh my God, I love all 7,000 of those features.
Yeah.
But does anyone need those? Like, is anyone using those features?
But can you offer some insight as to why they don't do this?
It's really hard. So I, many years ago, worked at a company called GSVlabs. They were a subset of GSV Capital they were in Redwood City and then later in San Mateo. And my role there was kind of a strategy consulting team within that. And basically what we did was internal and external innovation for large corporations. And so we would rapid product development, prototyping. We would actually take these ideas, these products for, the 3Ms and Fidelities of the world from kind of idea stage to a prototype or an MVP that they could actually take out to the market. And customer conversations are painful. It's hard to know the right questions. It's hard to connect with people. I, was younger then and more. I would still do this today. I remember taking a clipboard. We were working on a water filtration system for a Fortune 500 company, and taking a clipboard and standing in the water filtration aisle at Walmart. This is a true story. And just asking people like, what are you doing? Why are you buying that? Which one are you going to buy? And it seems silly, right? You're like, oh, come on, that's not the professional Silicon Valley.
No, but it is.
That's what you have to do.
Yeah.
Why are people making these decisions? And I think surveys and data can tell us a lot, but at those really early stages of building a company, you need to connect with these people. You need to ask why, and peel the onion a bit. And then hopefully they turn into your first customers, right? I mean, it's a...
I love that you're essentially putting boots on the ground. And I mean, if anyone has read any stories of great CEOs, they'll go serve coffee. They'll go onto the retail floor and they'll actually get in there and see what the decision point is and implement that. Yeah, I like that. So Megan, just to kind of bring you into this conversation, when it comes to relationships and founder fit, how much has this played a part in Ignite and now with the companies that you will eventually invest in or partner with moving forward?
Yeah, totally. And actually, one of the things that you were saying that I believe is the issue for not being as thorough in certain areas, especially with building relationships, is speed, is time. And there's so much pressure that we put on being able to do things rapidly and at a quick pace that often things are overlooked. And I don't think that there's enough long-term perspective on if you invested more time in the short term, what that actually allows you to do and from a propelling perspective. So I think, time definitely plays an element in this, but I would also say time plays an element in relationships. And actually, that was one of the things that we talked about originally, is that, people want instantaneous gratification in all areas of our lives. And relationships are one of those outliers that in order to have long, sustainable relationships, you can't ask for things right away, right? Without sort of feeding that funnel and getting something back. And so when we're talking about, even on the other side, LPs, right? Finding the right investors, you may be able to find somebody who wants to place capital today, right? But that doesn't mean that they're going to be the best LP for you. And certainly like developing those relationships and leading with education and, even with your example about how to get people through the door, just asking questions and sort of starting those dialogues, they end up becoming your customers or they end up becoming your investors. I think there's something to be said about that. So we like to do a lot of these events that sort of drive a lot of organic conversation, stay top of mind. And then when they want to have an introduction to a startup or a VC or our fund of funds, it just makes sense that we are that first point of contact, right?
So, I mean, I see that a lot. We go to events, with Bay Angels, people will just come up to me and say, I got an idea. And they want to start pitching you before they even give you their name. But I can kind of empathize with a lot of founders. They may be in a silo that are just focused on the product, right? Or two, they're in survival mode, and they need to find that next, check in order to stay, to feed their family, to keep this project alive, or they just don't know any better. So, what are some skills or what are some insights to those who do it well? How can they, factor in the time that it takes to build relationships? How do you do it so you're not so overbearing and to kind of rise above? I mean, you're talking about attend events, throw events. What are some other ways that we can? And again, we can just play popcorn style here for our listeners. What are some top of mind ideas that would help those that are looking for partnerships?
Totally. First thing that comes to mind is listen more, speak less. So somebody who approached you, if they are low on fuel and they need, to save more time, instead of them exerting their pitch to you first thing out the gate, the first question should be like, What are you currently interested in looking for in your investments? They're going to either find out that you're not allocating, that you're not an investor, or what they're looking for, and they can pivot from that conversation with either pitching their product, or they can be like, great, I know some other folks, let's stay connected, and then I can be able to find you good opportunities when I come across them. Boom, move on. So it's stop. You're panicked. Stop thinking about just the first way to fire hose everybody. It's the fastest way to scare.
Yeah. It's funny you say that, because I want to echo that. Kevin Jervich was on our show last week. He's now has Circles. He's the ex-49er. This guy's brilliant in terms of engaging with people. And one thing that he was emphasizing, and if those of you who are listening didn't hear that show, go back and listen to it on Spotify. One thing he talked about was, putting the frame around the potential investor as, are they a fit for me? Like, totally. Reverse it. Like, just don't, like you're saying, Megan, don't look to take a check from everyone, because it may not be a fit for you. And Keshia, what you have done with your companies, you bring a lot of other tools to the table because you want to make sure that you're a fit for them as well.
Yeah, actually, so before joining BDev, I ran an accelerator. I had a team in Silicon Valley, New York. And the one thing that I begged founders to do, like begged them, was to go about it systematically. So if you're going to raise money, instead of, finding a pitch book email list of every investor in the United States and then sending...
Yeah, spray and pray. Yeah.
And pray hard. Instead of that, have, maybe it's an intern, right? This doesn't have to be, it doesn't have to be the CEO doing all this work or the founder, but go through and figure out where do you fit into someone's investment thesis? Are they investing in companies at your stage, in your industry? All of these different factors. Is there something special about them that you can, connect to and find that unique piece? For us, it's companies, hey, we're ready to expand. Like we're in a position where we have clear product market fit. We know our ICP and we're ready for the next level. That would be a great pitch to me. Other VCs are going to be different. Maybe there's a funds that focus on women or focus on these different aspects of a startup. And so I think going about it from that point and then reaching out or trying to get introductions to these funds that are hyper targeted, even though it's more work up front and it doesn't always feel as productive, because you're like, well, I could be out at events. I could be pitching 30 investors without giving them my name first. This is actually going to save you a lot of time in the end. And I think it's saying the same thing, which is value your time, value your expertise, slow down, go after those really targeted introductions, and be a human. Because I will say, sometimes at events, and I'm sure you have this feeling too. By the way, I'm going to hit you up later, just so you know. But it can be overwhelming as an investor to be in the room and a lot of founders coming in, and it's not, hey, how are you? Or,
I want something. Yeah.
What did you think about what the speaker said? It's, let me tell you about my company. And you're like, oh, and you've got like a sandwich half in your mouth. You're like, oh, okay. Thank you. We don't invest in B2C, but thank you. So yeah.
Yeah.
I love it. So you talk about resources and what else you can offer to the potential client, and also hear something from both of you. And I think I want to coin something. So not only should you have an ICP, you should have an IIP, an ideal investor profile, possibly, that you can really zero in. I don't know if I just coined something there, but anyway, I think that's...
Can we get partial credit though?
Yeah, absolutely. It's a team thing here. So talk a little bit about that unique tool that you offer your investors and why it's so important. We're talking about targeting at this point, whether you're targeting a specific investor, a certain market. You provide a tool that kind of accelerates that a little bit.
We do. And actually some of our portfolio companies do use it for fundraising. That's something we're exploring. It wasn't built for that. But basically, we have a proprietary lead gen platform. It is built on a lot of machine learning and incorporates more and more AI. But essentially, it is a bot. It goes into our proprietary database of leads. It finds the perfect lead, not just at the company level, but at the individual level. It knows, what's the right timing to reach out to these people. It sends emails that look and feel like they're from your salespeople. And then it can even answer basic questions. So like a basic FAQ. I don't know, someone emails you back and they're like, oh, actually, we're in Canada. Do you work with companies in Canada? The bot can say, yeah, we love Canada. It's great. Maple syrup's awesome. And then the next step.
I caught that. Yeah. Nice.
And then we don't program it to say that. And then the next step is you hand it over to a salesperson. The lead is ready for a call. Mm-hmm. So basically what we're trying to do is for companies, and it's why product market fit's very important for us, kind of as that minimum, we need to see a certain level of traction. What we're trying to do is basically replace a few SDRs. So it's not only helping with the actual growth of the company, but it's also helping reduce your spend. It's helping kind of on both sides. That's a cool tool.
I love it. So anyone you invest in essentially has access to this because, I mean, who wouldn't want their portfolio companies accelerating, right? And so you're providing more and more tools. You also talked a little bit about the criteria for someone you invest in is being coachable. Talk a little bit about why a founder needs to be coachable and why that is such a unique characteristic.
Why that matters?
Yeah, why does that matter?
I've founded a company years ago and it did not do well. I'll be honest, it was an ed tech startup. I don't know why we thought there would be like money in teaching children to read. There wasn't, but that technology is still around. We rolled it into a 501c3 actually. But the number one lesson I learned from that experience was that I was continuously learning and that I, as the founder, was under no circumstances an expert in what I was building. I mean, I knew it. I knew my market. I was having all those customer conversations, but I was learning more than anyone else. And if you as a founder can't take in that feedback and adjust and pivot and move forward in the direction that you need to, you are less likely to be successful.
And so this is a bit for founder fit. I mean, it's one thing to have founder market fit, but specifically looking at that team, that individual of what their character is, how coachable are they? Can they grow? Are they humble, hungry, and smart? These are factors you really look at.
Yeah. But I would imagine even, from a fund to funds perspective, if you're working with other partners at funds, that this is something that we're looking for across innovation is we want people who can learn and adapt, and very few startups have a linear path from day one to IPO. Mm-hmm.
Is this something that you, Megan, when you're looking for partnerships that you take into account, or talk a little bit about the character, or you wouldn't even call it funder fit, you'd call it investor fit, I guess. I don't know.
Yeah. So you're talking to the right person. So as the person who helped design the actual diligence model that we use for both established managers and emerging managers, there's a lot of different criteria that comes into it. And it's obviously very different than from the startup level because it's a financial vehicle, right? So it's very different than at that sort of product level and validating, like, is there going to be customers to buy this? And while the strategy does matter, we sort of keep it broader up top. So definitely want to understand the logic on how they approach things, but it's really at risk mitigation. I mean, that's the majority, I would say at least, 35% of our diligence model is allocated to risk management.
Talk a little bit, so for our audience, why that's important and what is that?
It's important because venture capital in general is extremely high risk. And so think about it, if you had $1 or, $1 million that you were investing, if you invested that directly into a startup, the probability of success is, very low, regardless, right? Especially if you look at pre-Series A. Okay, well, if I invested in a VC, it's like, okay, they might have between 20 and 30 portfolio companies. Now we're diversifying our risk because the allocation of that capital is kind of spread out, right? So you hope for a 10x. But then when you look at a fund of funds, you're looking at, okay, maybe there's 15 to 20 VCs and then again, 20 to 30. So now you might potentially have 400 portfolio companies where your $1 million is sort of being allocated. So for us, like, we are a risk mitigation vehicle. And that's a lot of the reasons why folks do like a fund of funds investment is because you can still participate in venture capital without having to be fully vested into, a limited amount of opportunities that may or may not make it, especially when we look at AI innovation. So risk mitigation for us is really trying to understand how we're diversified and what opportunities are we hoping to catch, because you don't want to be 100% allocated in a fund of funds with health tech that's all solving cancer, because at one point in time you're going to be over leveraged in any of these underlying assets. Let me know if I'm going too deep.
Well, I wanted to back up just for our audience a little bit so that they can understand kind of the hierarchy of this. Like you will have an angel investor, you have an LP, you have a GP, you have VCs, you have fund to fund. Give us kind of like how those players come together to create kind of the funds that you're talking about.
As well, yeah. So at the startup level, it's just a base level. I think we all need to give our gratitude to the founders, because they're the whole reason why most of us are employed.
100%.
The innovation,
they're the most important.
They are the most important, right? And so everyone else is a player in the space, right? And you have to decide, which role you want to play on the field. And so when you have your startups who are out there innovating, what is the best way that you can support them, right? And so when the founders are there, they're building their technologies, they're looking for resources to be able to help them scale. And it could be an individual investor who's an angel investor who has, the knowledge to be able to navigate those conversations and those terms, which is sometimes really difficult for angels to do successfully, which is why you rely on professional services like a venture fund or a fund of funds.
So just to put a little definition around an angel investor for those who are listening,
Sure.
Again, we're going 101 at this point. An angel investor could be a friend, family member, somebody who is, has extra cash that may want to invest in you. They're not licensed. They're just someone who's out there who can help you get that start.
Totally. Okay. And you'll see that at the earlier stages for the angel investors to come in. They might be, doing 100K checks. They'll be an accredited investor, because pre-seed, you'll usually see family friends round, right? And then after that, the seed round typically brings in high net worth individuals who have that extra capital to allocate. You definitely don't want to go to anybody's grandma or grandpa who, needs that money, right? So sort of keeping in context with those who are able to have extra money allocated. After that point in time, when they're in the seed round and anything above that, you might want to find VCs who bring allocation, like resources, right? So in this case, maybe there's other engineering resources. I know that BDev had, we actually interviewed them a few years ago for the startup that I had, which is funny.
Interesting.
Yeah. And or platforms. And actually, one of the funny things that we're seeing in terms of a trend is that you need to show up with more than just a check. So you have the big giant VCs like your Sequoia and Andreessen and Lightspeed, who will always have the brand. Like you're going to gravitate towards them because that name opens doors organically. But a lot of the emerging managers that we're seeing, it's like, what else do you bring to the table, especially for the really good deals that everybody wants? There's plenty of startups that will take your money because nobody else will give them money. Well, what about the startups that are phenomenal and everybody's fighting to get a piece at the table? So like VCs have to show up with more than just a check. Mm-hmm. So it's a very competitive market if you're trying to get in at the right deals, negotiate the right terms. And so at a fund to funds level, we're really looking at the VCs who have an IP when it comes to deal flow. Like, how are you showing up from a value added perspective that others can't, because you'll own that? Saying that you get deal flow from Stanford is not enough. It's like, there are a lot of graduates at Stanford who have those inner circles. Like, how do you own that space? And a lot of times it's because they were previous founders. They have a direct line in with those founders, and that trust and confidence, relationships cannot be duplicated or replaced. And I think that's really part of the measurement that we have.
We'll go back to the IP before we get too far. Yeah. So what does that look like from a VC perspective that helps them stand out?
So for this specific example, it's access to a untapped deal flow ecosystem, like something that nobody else will have access to. And then it's measuring the quality of that, that specific access. So if you guys were positioning this, it's like we get tons of startups coming through because we offer a recruiting like platform or engine, and that sort of allows us to get startups at this level who are looking at this stage, right? And we know we could be super effective at this stage because we offer XYZ, right? And so that's really unique. That's something that other folks don't have. I'll take in, for example, blitzscaling, something that's really important for blitzscaling, a Reid Hoffman-backed fund. Also, in full disclosure, one of our earlier investments, they do Llama Lounge. They do AI salons. So it's this event that has 500 plus people trying to get into these events, some of the best early stage startups in Silicon Valley right now, and it belongs to them. They own that market. And while those startups might go to other events, it's something that like has their name on it, has their brand on it. So anyway, that's, those are some of the IP deal flows that we're looking for. It's not 100% allocated in terms of importance, but on the weighted scale, like it is extremely important, because what's to say, like, why would we give you $1 million over a different VC? Like, same questions you ask the startup. It's like, what is your key differentiator outside of, just convincing people that you have money?
So let's go back to that path. And I think I'm going to describe the path, and then we'll go to our quick break. But what we'll do here is, Keshia, your company didn't start out as a VC fund. You started out as the company. Am I on the right path here?
Kind of. So Buyer'sDev is a 15-year-old unicorn out of LATAM. They've hit unicorn status, I don't know, 6-7 years ago. So I'll verify that date. And Nacho DeMarco was their founder. Our LP, so we're not a strategic investor, we're not a CVC, but our LP base is the co-founders of Buyer'sDev. So everyone who's a partner at BDev Ventures today also holds, for the most part, holds some type of C-suite role there. So we don't see a lot of them day to day. But yeah, so it's a complicated relationship. We are an institutional investor. We're looking at returns, but we are deeply connected to Buyer'sDev.
So there came a point where you had to decide to crack into the VC market, and so that's what we'll talk about a little bit.
Cool.
And then I'll hand it off to Megan to say, how do you get into this space? I think that's what we'll roll into. And with that being said, Brian, I think we can go to our break.
Excellent. We'll just take a short break and we'll be right back.
Yeah. All right. We're good to go. We're back with Silicon Valley and back. We're talking with Keshia and we're talking with Megan. Keshia, talk a little bit about, again, how your company grew. And then there was this point where you wanted to go into enterprise investment. Unpack that a little bit. So
it is a complicated relationship to explain sometimes. So Buyer'sDev is a large LATAM unicorn. It's been around about 13 years. They hit unicorn status 6-7 years ago. They were actually fully bootstrapped. They never raised venture funding. I wasn't there at the company, so I can't say exactly why, but I think especially in LATAM at the time, VC money was very expensive, and not everyone 13 years ago was thinking about how can I add a lot more value to these companies. And so fast forward to about 3 years ago, BDev Ventures launched. We're not a CVC, so we're not strategic, but we do share a co-founder. So we're, in a sense, kind of a family of companies, if you will. And Nacho DeMarco, when he decided, he's the CEO and founder of Buyer'sDev, when he decided to start BDev Ventures, he really wanted to make sure, he was a founder, right? He's not and I think he would say this to you, so I think it's okay to say, he's not a venture guy. That's not his background. That's not his strength. That wasn't what he was bringing to the table. But he is an operator, and he's built something really special. And so he looked inside at Buyer'sDev. Hey, what was the difference maker for us? Like, what was the game changer? And it was this lead gen platform. And that is why they spun it out. So it's an independent company now. It's not otherwise commercially available, but we're using it with our portfolio companies.
And at that point, he went through a process of figuring out what it takes to kind of become a VC or in this space.
Yeah.
And here we are today.
Here we are today. And I'm going to learn so much from you, Megan. You have no idea. I'm like already planning and scheming, like, can I take her to lunch? Because our LP base is made up entirely or almost entirely of the kind of this group of co-founders from Buyers Dev, but super fascinated. Like, I invest in startups, but you invest in people like me. Like, VCs have to pitch. We go out and raise money just like a startup would. I'd love to learn more about.
Yeah, I think
we all do.
We're all building something. But yeah, Megan, take the ball and run here at this point. This is really, correct me if I'm wrong. This is really the genesis of corporate investing from BDev's perspective. However, whether it be enterprise or an individual, how does somebody get into this VC space?
Well, first, everybody's path is 100% different. I think what I've really learned from all of this is, and I'm sure a lot of people feel the same, is that venture capital is definitely a black box. Like, it is this kind of mysterious thing, and oftentimes people were invited to participate in venture capital, and that's essentially how you got in. Maybe you were an investment banker and that's the first thing you did out of college, or you worked at McKinsey and that was the first thing you did out of college as a research analyst. And then, somehow made your way into, working as a venture analyst at a VC firm, right? But for the majority of us who are interested in getting into venture capital, because it is an investment vehicle and because there is so much value to provide to whether it's startups or to other VCs, it's different paths. So one of the paths that we're seeing a lot of is there's these established entities and they essentially are profitable enough to start their own venture arm and then just continue doing what they're doing and then just kind of funding their projects and expanding that out to other LPs to participate in that, again, unique IP deal flow. Mm-hmm. Other times there's individuals like myself who have taken the path of just figuring it out. And so my figuring it out moment was relying a lot on my network to answer some of the just questions about what is the experience like in this role. I see from the outside, right, that I'm very interested. I love the entrepreneurial piece. I love the finance piece. My background is actually in financial services. I was working for RIA firms doing marketing, ops, business development. So my perspective within that was always working with high net worth individuals and managing their portfolios. But venture capital was never part of the portfolio from my perspective. So when I was able to come out to Silicon Valley about 6 years ago and became an entrepreneur, ate glass, it was one of the toughest experiences of my life and so humbling, right? That's why I always want to give a shout out to the founders out there who are making it work, because
they go through the gauntlet.
It's incredible. And it actually fuels our economy at a larger scale. So without them, there's a lot of other impacts. Anyway, all that to say is that when I finally came out of being a founder and was like, what do I want to do next? I think a lot of that North Star for me was continuously molding and crafting, using basically my background as clay and sort of shaping what that next part of that clay projects looks like.
So I want to double click on something because I really like the insight and what you're going through at that moment. You're moving away from being a founder and now looking to become a VC. And what I'm hearing is you had to be vulnerable, but a lot of people in Silicon Valley aren't really vulnerable a lot of the time.
Yeah.
There was this point where you just said, I have all this background. I don't know what I'm doing, but I need to learn. And you had to be open. You had to be coachable, like Keshia was saying earlier. And what I want to encourage our listeners to do is to continuously go out there and learn and ask and say what you don't know. And that's essentially what you had to do in order to position yourself for success. Is that what I'm hearing?
Totally. I think it's the Midwest in me, but no, I'm just kidding. But it's a delicate it's a delicate way of doing it because you still have to ask for help with confidence. You can't have other people solve your problems, and you have to be very pointed in the way that you're wanting help and
We're
support.
all shaking our head. Yes. In the
Yes.
room. Yeah.
Yeah. So, I mean, going to somebody, it's just like asking for money, except you're asking for advice. And so the advice that you're asking for is you have this very specific position. I want to know what you learned about that very specific position because I am looking to be in that very specific position. And so it's kind of like this free flowing dialogue of just asking them, what was the number one thing you learned? Like, what does a day-to-day look like for you? Like, where were those pivotal moments? Because everyone has them. Whether or not they're open enough to like discuss them is something different. So keeping those relationships open, asking them for that kind of support. But for my venture capital, like, over the last year, like what it really was breaking into it was leaning hard and asking mostly women, like, what was your experience in venture capital? And the reason why they were open to it is because they wanted more women in venture capital.
But what I'm also hearing is it wasn't cut and paste and I'll do what you did. The symbolism you used before was I'm molding this. So you were listening and synthesizing with where you wanted to go with what your background was like and recreating with the insights that you were getting at the same time. I oftentimes hear people just they think it's cut and paste, but it's not.
If you cut and paste, you're going to be miserable because you're living somebody else's life. The only way that you fully like live your best self and actually find a role that like you're pumped about and like super excited is when you're able to like I said, it's that clay. Like you're born, you get thrown out into the work environment. You have like a square thing of clay, and every role you take, you're just sort of moving some of the clay away to like figure out like that final like thing of like what you want to make. And you can do like tons of different like career pivots, and that's totally fine. But I feel like every single experience I've had is just because I learned from like the previous role of like, yeah, definitely don't want to do that again, but I really loved this. What does that role look like? Because there's so many different titles that if you just, I want to be a GP. Why? Like, do you love fundraising? Do you love going to networking events every night? Do you love not seeing your family a lot? Do you love traveling? Yeah. Do you love people telling you no? Like, I think there's a lot of lifestyle funds out there. Like first time GPs are raising $150 million funds, and you're like, no one's ever given you money before, and you want someone to give you $150 million. Okay, what is your background? Like, you know what I mean? So there's a lot of these lifestyle funds because they look at the management fee, but it's like you have to love this as much as founders love it, as much as everything else. So I think sometimes the title isn't really a fair way to evaluate, which is why you have to ask the people with that title, what is your job really?
Yeah, wait now I got to ask you.
Oh, shoot.
Yeah, no. I mean, you asked, what do you want to do? But the second question is, what is it for? And so, Megan, I got to ask you, what is it for you that drives that love in this game for you? And Keshia, I'm going to ask you the same question too.
I love putting the pieces together. Why we didn't start a VC fund is because there's really incredible VC funds out there solving a lot of these problems. I love this like larger macro view, like designing the portfolio construction, like figuring out how the industries come together with the fund manager experience, with the like allowing me to put this chessboard together in order to drive a certain amount of returns. Like that is so exciting. And like creating the diligence model of like figuring out like, what are the evaluation criteria to like really tell you like how do you de-risk this? And our LPs will tell you that there's being prepared and then there's Megan. And that is actually a quote that we have. So like I love putting the pieces together, and working with the VC fund managers for me is like a lot more fulfilling because it's just we can relate better than I can support an actual like startup founder themselves, and it's just recognizing that.
But I'm feeling there's something, again, Keshia, I'm going to come to you, same question. I'm feeling when I get to talk to you, whether it's one-on-one on the show, whatever it is, that you're fully engaged from two different perspectives. One, you're fully engaged from the science perspective, right? Like this needs to make logical sense. But then there's this art to it where you're saying, okay, here's what I have to work with. Now let's rearrange it and see what we come up with. And that's a unique character quality where you're able to see things from multiple perspectives and continue to internally stress test that. I don't know, Keshia, does any of that resonate with you?
You're amazing.
Thank you. Did you say on radio? They don't know who you
obviously,
said.
Obviously, both of you. I said it to everyone.
That
in the
was
room.
fully on to me.
I love the advice that you're giving. That like venture is a black box. I actually think titles within venture can also, depending on the fund that you're at, can be such a wildly different experience. I did a lot of the same when I took this role. They had reached out to me. They wanted someone actually, I spent my first year here building out our portfolio success team. So building out like a traditional platforms team functions, but also like a literal customer success team for the lead gen platform that we have. And I asked a lot of, and admittedly also a lot of women, like there's some really cool VC groups for women now. Like Women in VC is a really good one. And I asked a lot of women, well, what do you think about this? Do you like your job, with similar titles? And for me, I think the excitement was, and the reason that I joined and was so excited about it, the reason I'm still here, the reason I'm doing this, is the founders. Like I get as excited as they do when there's a win. I feel it as big as they do when there's a loss. I don't know if they'd agree with that, but I feel it. Like I'm in there, I'm living it with them. I love building companies. I'm an operator, and I always will be. So I'm in venture now, but I'm a true operator, and that's where the joy for me is. And I love those like operational puzzles and figuring that kind of stuff out. It drives me. Again, you get that spirit, like that feeling of like it's 8 p.m. and you're working. By the way, venture is not. I wouldn't get into this because you enjoy your evenings and weekends. But yeah, it's like 8 p.m. and you're still working. And you're like, this is great.
But again, you have the science and you have the art of it. You're saying the exact same thing. And again, what I also realize at the Silicon Valley level and those who are doing great all over the world, there's this respect for people at the top. I mean, there's two camps, right? There's this massive respect for what you do. Like you both are in the same game, but the respect that you're having for Megan and vice versa in the room, I think that's a difference maker in the new wave of VC. Because a lot of times you're talking about the black box, but really Silicon Valley still has this silo approach. And I don't think that's going to be the way to go moving forward with all the competition that's rising up within the industry. Does that land with you, Megan?
Yeah, no, totally. And I mean, I think it goes back to relationships. I mean, this is 100% a relationships game. And I believe that's why.
Oh, I was just going to say, can you say that one more time, please?
For those of us in the back of the room.
You kind of glazed over it, but we'd like to hear that just one more time.
Yes. VC is a relationship game, and all of the reason why people invest into our fund of funds is because we own those relationships with those venture capital funds. And because we have, on our advisory side, we work with pre-Series A startups, and we're actually sourcing, deal flow to our VCs. Like, it is the coolest experience for us because at the center of the investment side and the advisory side, we do all that community building and building those relationships that don't necessarily convert over to dollars right away. So it's it is a relationship thing. And if you don't respect someone, or if you maybe talk nasty about somebody, even just a slight dig, people on the West Coast, they'll smile at you and they'll nod their head, and then they never talk to you again. Like the East Coasters to the Midwest, they'll tell you what's up, right? They'll be like, okay, get lost, buddy. But like on the West Coast, like, it's hard to be successful in Silicon Valley because it is a game. It is always a relationship game where you are just, you just kind of have to work it and be genuine and authentic. And if you can't show up that way, people know.
Yeah.
Right?
And so what I'm hearing you say, I mean, and again, this is something that I feel instinctively. I mean, and both of you can chime in on this. It's like, yeah, you'll have the relationship, but really the depth of the relationship and how genuine you are will then determine access. Yeah. And again, if you're a good person, I mean, Megan, you'll open the war chest to somebody else if you have a good relationship with them, right? And vice versa. If I really like somebody and they're likable and they're genuine, I'm going to do an introduction. Like, I'm going to put my name on this and say, hey, I like this person. There's high likability. and I have resources that I want you to use. And it sounds like, again, Keshia, that's what your company is doing. I mean, Megan, Ignite, I mean, you guys are doing hands down. But Keshia is in the same, you're in the same realm, is where we have resources for you to utilize. Please use them. And I think that is the new Silicon Valley, is we want to open the war chest.
I hope so. I think relationships are really important, and there is a big difference between, and it can be subtle, right? There's a big difference between like coffee was great, thanks. I'm going to make an introduction to someone I think is really valuable and interesting, or coffee was great, thanks. Mm-hmm. And Silicon Valley is very much so. I think it takes time to develop that network, that ecosystem. At BDev, we're approaching it, and I mean, at least I hope that this is the image that we're giving, to the wider world. We actually do a free pilot as a part of diligence. And it's like, hey, we're going to throw a bunch of free leads at you. And if you can turn those into some sales, then like amazing. And if not, like hopefully you still got some cool free leads. We're probably not the right fit for you. But what we're trying to do is go above and beyond. And before we even invest, now selfishly, this is de-risking our investments, right? Because we're investing in companies that are growing because we're growing them. But on the other side of that, it's also, we're putting our money where our mouth is. We're showing you the goods before we ever sign a paper or anything like that. And I think that is something that happens in Silicon Valley that you don't see in traditional business. You don't see that kind of pay it forward mentality that here, I'm going to make the introduction. I don't expect anything from you back. And I think that Silicon Valley is really built on that.
Mm-hmm. Yeah, I think with the greatest leaders, they lead with vulnerability. They say, here, we're going to give you this value up front without the expectation.
The ones I do. I don't know that everyone in tech is that kind of leader today.
Maybe I'm naive, but you guys are definitely doing that. Megan, you guys doing that over at Ignite. Kind of complete that thought of getting into venture capital. What are kind of some next steps? You talked about relationships. You talked about being vulnerable, asking questions, help me out, understand this, creating it. What is kind of the next pathway, next steps to becoming or being in that VC space?
Yeah, like I said, there's not a copy paste. Yeah. So this was just my experience. But after I was able to ask a lot of the questions and sort of do my own validation on, okay, yes, this is actually exactly what I anticipate. It's what I'm doing, or it's a collective, of my previous experience. I end up trying to find, okay, where are the resources that actually give me that foundational knowledge so that I can actually be prepared with different industry language. I'm really understanding like how it all works together. I'm also an operator, like that's just how my brain works. I need to understand something from soup to nuts. And so when I was looking for resources, I mean, it's like I literally just got my MBA. You would think that you would know. Absolutely not. Venture capital is like a totally different beast in terms of the way it works. And a lot of the resources out there are so expensive. It's like going and getting another degree. And I'm like, no. I'm way too established in my career where I'm going to go back to school and pay $20,000+ to do this. Mm-hmm. So for me, those were some of the variables in the decision making. Again, everybody's different. Everybody has different expensable income that they're willing to put up for this. But I wanted to continue to keep testing to say, is this right for me? And so I actually used the Venture Institute, which is a sister track to VCLab, which is pretty popular out here. And so what Venture Institute is, it actually takes you through 9 weeks of understanding basically everything about starting a fund. So the idea of entity structure, any sort of legal agreements that you needed, how to position, how to, negotiate with LPs, clauses that you needed to have, all of these things that I felt I need to understand this better than everybody else. And I did that, graduated in the top 1%, was offered a residency with them to work on their fund of funds, which was funny because I don't think anybody else wanted to work on the fund of funds. And I was like, oh, the fund of funds is awesome. So I got to work with Marco. It was really great. It was a really great experience. I really liked the team and was able to see what, an institutional investor who's been doing this for decades was doing. And I think that's the point, is finding an ecosystem where you're getting the knowledge where you can feel comfortable to ask a lot of questions and then continue to keep testing and trying things out and finding the right teams to do it. And not being afraid to go out there and just, ask people. We recently brought on a fellow, and it was because he wanted the experience, right? And it's so like giving back as much as like other people gave back to me. It's like, yeah, I'm going to find the time to work with you and be able to give back. So I don't know if that answers the question.
No, that was good. I think that
cool.
gave us a lot of foundation to consider. Nice. But again, the fact that I think it goes back to no one path is the same. Same as a founder. Like what worked for you or worked for someone else isn't going to be a cut and paste for someone else. So I love that. So the encouragement is just get going, get out there, be vulnerable, ask if this is the path you want to take. We got about 1 minute left to go. Keshia, how can people connect with you? Again, I want to thank you all for being here. You guys are both amazing. But Keshia, how can people connect with you?
My email address. Well, how about LinkedIn? That's probably better. Mm-hmm. My name is spelled Keshia Theobald-van Gent.
The only one.
I am the only one on LinkedIn,
Can't miss
which is
it.
quite fun. Yeah,
I love it.
My first name is quite unique enough. So
and follow BDev
Ventures
on LinkedIn as well.
All right. Follow me on LinkedIn, Megan Thorp, Megan. Last name Thorp, Thorp, no E. And follow us on Ignite. So igniteutm.com. If you click on the Fund of Funds page, it'll take you to ignite.investments. That is where you'll see more information on the Fund of Funds. And if you're interested in coming in as a LP, please reach out to us. Happy to have a conversation and take you through our investment strategy. If you're anyone else in the ecosystem, we probably have a way to engage with you or collaborate with you.
And you have a summit coming up.
We do. So we have our signature AI infrastructure event. We currently have AMD, Supermicro, and about 10 other sponsors coming in for the event. It's about a 500-person event in San Francisco.
And that's the infra, right?
That is the infra. So yeah, that's actually part of our investment thesis for our fund of funds, diversifying across the AI infrastructure stack, catching that upside of AI innovation. So thank you for the plug-in, Brian.
Yeah,
Appreciate
my pleasure. Well, I love having you both here. You're both awesome. Again, you're all my best friends. All right, with that being said, Brian.
Your world, Brian. We just live in it.
We're surrounded by amazing people. Okay, and that's a wrap. Thank you for listening to Silicon Valley Impact. You can join us every Tuesday from 3 p.m. to 4 p.m. Make sure to follow us on Silicon Valley Impact on LinkedIn. And you can connect with me on LinkedIn or email me, Brian at Silicon Valley Impact. We'll see you all next time.